My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. The most significant feature of this market in recent weeks has been the very significant lows of 2021 at 15,665, which led to the lows of late November 2023, plus this year in January, February, and with some mild finessing, the lows of late July and early September in the 15,840 and 15,600 zone. It is at this point that I feel obliged once again to mention the big descending scallop pattern that I have been going on about for months now, and what it may mean within the near-term universe. So the key level has been and is the lows at 15,840. A significant move below this, and by that I mean that you would know it when you see it. A significant break below this would give a potential downside for the descending scallop pattern in the 13,830 zone, which would not be too far away from a potential below for the old bearish halfway hesitation seen over June and July that eventually never materialized. It still all comes down to what the market has done and even might now still do with the 15,840 zone. First time around in late July, prices chose to bounce back upwards, and during the start of August sustained the bounce. However, over mid-August, prices had an issue with testing the June 2021 low at 17,095, and I suspect indirectly the now flatlining long moving average, currently at 17,375. This suspicion eventually evolved into a mid-July to early September ascending wedge pattern. Then, early 8 weeks ago, prices broke down through the base of the ascending wedge pattern, easily reaching the primary target, and close enough to the secondary target for me to choose not to designate it. However, prices then built up again, enough for me to finally draw a late July to mid-September bright red bullish Andrews pitchfork, which held with some minor breaches until last week, when the market punched down through the bright red lower time, currently at 16,720, and the nearby May 2021 low at 16,610. Now below this was a fairly free area until we once again reached that key level, the 15,840 level, which we are testing right now today. As I said last week about such a move down, and I quote, "This move lower, should it continue, will bring to the fore once again the question I posed right at the beginning of this commentary and have done now for months, the future of the big descending scallop pattern." End of quote. I've said earlier and many times before, a significant move below this, and by that I mean you would know when you see it. A significant break below this would give a potential down for the descending scallop pattern in the 13,830 zone. LME 3-month zinc. This is this is a very busy and colourful chart. For that I apologise, but all these patterns here do relate to what is going on right now. So let me explain. 9 weeks ago, prices drove higher, prompted by a small late July to mid-August reverse head and shoulders pattern, up over the June 2021 low at 28.10, over the broken old upper time, currently at 28.54 of the May to August 2023 bullish shift pitchfork that subsequently acted as a August 23 to April 24 upper bull channel line. Then over the short medium moving average, currently at 29.64, the medium moving average, currently 28.96, a congestion band between 29.58 to 29.65, containing the April 2019 high at 29.59, and the 50% Fibonacci line of the big old 2008 to 2022 move at 29.65, plus further up, green middle time, currently at 30.54 of the February to August bullish shift pitchfork, as well as over the July high at 30.22, followed by the purple neckline extension of the September to December 2022 reverse head and shoulders pattern, currently 31.37, where the market finally slowed and took a breather 2 weeks ago, just shy of the June 2018 high. I said on this move up 3 weeks ago, and I quote, "Prices have moved higher still to now test what I suppose is the holy grail of this market, the purple neckline of the September to December 2022 reverse head and shoulders pattern. This could become a seminal moment, so watch carefully." End of quote. Now I also said 6 weeks ago, and I quote again, I've also drawn a new early August to early September bullish Andrews pitchfork, highlighted in bright red, in renewed hope in showing the bullish angle of attack of this market. End of quote. Well, this bright red bullish pitchfork had been operational until 2 weeks ago when the market turned lower and breached the bright red lower time, currently at 31.72. However, though breached on the downside, the market has also not let go fully of this bright red pitchfork. Now, I suspect it was due to mid-October seeing not just the bright red lower tine and the purple neckline extension, but also the green middle tine, currently at 30.54 of the February to August bullish shift pitchfork, and a dark blue neckline of the small late July to mid-August reverse head and shoulders pattern, currently at 31.22. All together in a fairly narrow area that helped hold the market up. However, these four are now separating, and as a consequence, their combined forces, which were greater than each individually, is now coming under bearish pressure. This all goes back to what I said 3 weeks ago, and I quote, "The question now is whether the market will falter here, much as it did in late May. Will it really go for the higher price?" End of quote. Over the last 4 weeks, I had hoped to see, if not the answer, then the beginnings of the answer. But so far, this still eluded my gaze. I'd suggest continue to keep a careful watch on the 29.40 zone below and what may or may not happen at and over the purple neckline above. LME 3-month tin. Prices started their recent build higher down at the congestion between 28.835 to 29.005, containing the July 2011 high at 29.005 plus the important gold highlighted slowly rising long moving average, which is currently at 30.735, and back then the nearby extension to the October 2023 to January 24 reverse head and shoulders bottom, currently 28.415, and finally the 50% Fibonacci line, the March 23 to April 24 move, down at 27.330. All these slowed, stopped, and at the start of August turned prices higher. The pushback up then became stuck in what I can best describe as an accidental congestion area overhead, created by the combination of the medium moving average, currently at 31.975, the short medium moving average, currently 32.060, the 50% Fibonacci line, the March 2020 to March 22 move at 31.845, plus the neckline of the thin and tall April-based head and shoulders pattern. Yes, that one. It's currently at 31.935. Prices were stuck there until 6 weeks ago when they broke higher, moving up over an earlier all-time high from April 2011 at 33.610 and up to the 50% Fibonacci line, the March to October 2022 move, up at 34.175. This was breached, but the market could not break any higher. 6 weeks ago, I drew a late July to early September bullish Andrews pitchfork, which I finessed 2 weeks ago into a shallower bullish shift pitchfork for the same move, and which is highlighted in dark blue on my daily chart. I was the first to admit that this was not a perfect pitchfork, but the market still utilized it until 2 weeks ago, when prices punched down through the lower time, currently at 31.890, but only as far as the gold highlighted slowly rising long moving average, the same one the market has bounced up from in late July, then early August, and also avoided in early September. I said last week about this long moving average, and I quote, "This is the key level, and it asks the question of this market whether it will bounce up from it as it did in late July, early August, as well to a certain extent back in early September, or will it break it and test the late July base congestion between roughly 28.835 to 29.005. There is a lot of overhang in this market, so if it does break, then it may reach down to the previously mentioned neckline extension for the October 23 to January 2024 reverse head and shoulders bottom. However, we have not done so yet, so just watch carefully in case it does." End of quote. Right now, I'd continue watching carefully, as there is another very recent pattern possibly developing, and that is the action over last week and the start of this week, which could be the flag part of a possible bear flag. If this comes about and a true break below the gold long moving average would seemingly justify such a break, well, the downside could be measured anywhere in between 29,500 down to 29,000 or even 28,250. We'll know should this break happen. It'll become pretty obvious. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.